Hobbled by high interest rates, punishing inflation, and Russia's war against Ukraine, the world economy is expected to eke out only modest growth this year and to expand even more tepidly in 2023. That was the sobering forecast issued Tuesday by the Paris-based Organization for Economic Cooperation and Development. In the OECD's estimation, the world economy will grow just 3.1% this year, down sharply from a robust 5.9% in 2021. Next year, the OECD predicts, will be even worse. The international economy would expand only 2.2%. OC It is true we are not predicting a global recession, OECD Secretary General Matthias Cormann said at a news conference. OC but this is a very, very challenging outlook, and I don't think that anyone will take great comfort from the projection of 2.2% global growth. The OECD, made up of 38 member countries, works to promote international trade and prosperity and issues periodic reports and analyses. In its latest forecast, the organization predicts that the U.S. Federal Reserve EOCO's aggressive drive to tame inflation with higher interest rates EOCO raised its benchmark rate 6 times this year. In substantial increments EOCO will grind the U.S. economy to a near halt. It expects the United States, the world's largest economy, to grow just 1.8% this year, down drastically from 5.9% in 2021, 0.5% in 2023 and 1% in 2024. That grim outlook is widely shared. Most economists expect the United States to enter at least a mild recession next year, though the OECD did not specifically predict one. The report foresees U.S. inflation, though decelerating, to remain well above the Fed's 2% annual target next year and into 2024. The OECD's forecast for the 19 European countries that share the euro currency, which are enduring an energy crisis from Russia's war, is hardly brighter. The organization expects the Eurozone to collectively manage just 0.5% growth next year before accelerating slightly to 1.4% in 2024. And it expects inflation to continue squeezing the continent. The OECD predicts that consumer prices, which rose just 2.6% in 2021, will jump 8.3% for all of 2022 and 6.8% in 2023. Whatever growth the international economy produces next year, the OECD says, will come largely from the emerging market countries of Asia. Together, it estimates, they will account for 3/4 of world growth next year while the US and European economies falter. India's economy, for instance, is expected to grow 6.6% this year and 5.7% next year. China's economy, which not long ago boasted double-digit annual growth, will expand just 3.3% this year and 4.6% in 2023. The world's second biggest economy has been hobbled by weakness in its real estate markets, high debts, and draconian zero-COVID policies that have disrupted commerce. Fueled by vast government spending and record low borrowing rates, the world economy soared out of the pandemic recession of early 2020. The recovery was so strong that it overwhelmed factories, ports and freight yards, causing shortages and higher prices. Moscow's invasion of Ukraine in February disrupted trade in energy and food and further accelerated prices. After decades of low prices and ultra-low interest rates, the consequences of chronically high inflation and interest rates are unpredictable. OC financial strategies put in place during the long period of hyper-low interest rates may be exposed by rapidly rising rates and exert stress in unexpected ways, the OECD said in Tuesday's report. The higher interest rates being engineered by the Fed and other central banks will make it difficult for heavily indebted governments, businesses, and consumers to pay their bills. In particular, a stronger US dollar, arising in part from higher US rates, will imperil foreign companies that borrowed in the US currency and may lack the means to repay their now costlier debt.